Hi everyone, welcome back to the review of the positions in my IRA account. We are working on the covered call strategy and see if we can beat SPY with the covered calls. So let's see. So we are trying to generate income from selling the SPY covered calls. And so what it really means is we buy 100 shares of SPY and sell one covered call, one contract at a time. And hopefully the money from selling the contract can add up over time and the losses will be smaller than the gains. Of course, we have to expect some losses as well with this strategy, but over time, the gains should be bigger than the losses. That's why my goal is to gain 60%. 6%. I wish it was 60. 6% over the next 11 months. So, and if you gain 6% a year, it may not be significant at first, but over a few years it adds up. And in fact, if your account grows just 6% every year, I think it will double up in 12 years. So, if you invest over 12 years, this strategy will essentially allow you to double your account over whatever other gains and things you have. So what the SPY does on its own. So that's really good. Because you can never, when you have 100 shares of SPY and sell one call, you have some extra cash left. So I'm not going to kind of use that in our experiment, but I put the leftover cash into two high dividend stocks, Starwood and Rhythm. And so I'm going to mostly ignore these, but I just don't want to have cash lying around and do nothing. Okay, so let's jump to the trades. Just a quick review. I'm not going to talk about the positions that I had previously in my account. So on January 31st, I started with this much money in my account, $47,500. And so first thing we did, I bought 100 shares of SPY and I sold to open one SPY covered call, and the strike price was 413. So and at the time I bought the SPY price was at about $404. So the strike price was roughly $850, $850 to $9 above the current the price of the stock or of the ETF, and so about 2% above the price. So that's kind of for me that's a sweet spot. I'll explain more, where I got the 2% from in a different video. So, and as I said, in addition to the long SPY ETF and the short SPY call, I just added, some shares of Starwood and a few shares of Rhythm. And so at the end of this, I had 53 cents left in the account, which is perfect. As I said, I don't like to have cash in my account. So, and these Starwood and Rhythm stocks are pretty safe. They just pay dividends. Especially Starwood doesn't move much. Rhythm, I'm hoping it can actually go up a little bit. Okay, so this is a snapshot of my position. It's a screenshot of my Fidelity account without the account number. So as you can see, we have 100 shares of SPY, and we are short one SPY call, and the strike price, as I mentioned before, is 413, and actually it expires February 17. So it expires in a week, and so next week actually is going to be more interesting because we will have to do something. This past week we didn't have to do anything. We just watched the position. Okay, let's move on. And so ever since I bought the SPY exchange rate fund and sold the option on January 31st, right around this price, right here. That's the orange mark there. And pretty much ever since I entered the trade, SPY has jumped up because of interest rate announcement from the FOMC and things like that. So I think this was Tuesday, I believe, Wednesday, Friday, Wednesday, Thursday. It went up. Friday a little bit down, and yeah, this was Friday. And so here, the dotted blue line, this is the strike price for my option. This is how I'm going to denote it. So essentially, as long as we stay below, as long as we stay below this price at the expiration, I don't really care so much, what happens before, but at the expiration, as long as SPY stays below this line, then we can profit all the premium that we actually got for the call, and that was like $317. If, however, SPY finishes above the 413 strike price, say somewhere here, this would be like 415, then we would lose $2 of that premium, or actually $200, because each dollar move in the stock, in the option, really we are controlling 100 shares, so you have to multiply by 100. Okay, so SPY on Friday finished around 407, I think, and let me go back. 408, sorry. The numbers are slightly shifted. So SPY, the closing price was 408 on Friday. Today, by the way, is Saturday. So this is at 408. We are at 413. There's still $5. We have a $5 buffer between the closing price and the strike price. So we are in a good shape. Hopefully, SPY will stay below this price, and we will profit all the premium. Okay, so I kind of reworked the table a little bit of what I'm keeping track of. So for now, I'm keeping track of everyday moves, but really going forward, I'll probably switch to just once a week, like each Friday. I'm gonna, look at the price movement, because it's really pointless to look every day. Okay, so in the first kind of few columns, there is the SPY kind of value and profit and things like that. So we bought it on the 31st for 404.38, but already on the 31st you can see SPY closed up, and then it closed up even more, and then started coming down, and finally today, or the Friday, is at 408.04. That, even with this, so I am actually not keeping track of the percent profit for now. I'll just keep the absolute profit, because these numbers kind of add up better. So in the 2 weeks that we are in the trade, SPY made us $366, which is close to like 0. Hold on, I can tell you right away. If you come here, SPY, the overall profit from the time we bought it is 0.9%. In 2 weeks, that's actually awesome. Okay, go back. So that's SPY. Now, the other interesting part is I want to track the performance of the calls and the cash that we got out from the calls. Nothing else, no other cash, just the ones that we got. So originally, we started with zero cash. Sorry, here. Right? There's nothing. And so we sold the call and got $317 out of it. And as long as I don't make any new trades, I still have the $317 from that call. And let's see how the call behaved. All right, it originally the price, because SPY was going up, the price of the call, of course, was going up. So you can see we actually the parentheses mean it's negative balance, right? So we were losing quite a few. At some point Thursday, I think, was the worst day. We were down $400. But the market kind of keeps up and down, keeps moving up and down, and that's to be expected. So things calm down a little bit, and actually, as of this Friday, we have a profit of $30. It's very little, but as I said, the time value actually is still there in the option, and for expiration week, the option will lose a lot of value. If SPY stays at this value 408.04, you know, the price of the call, essentially this 287, it will go to zero, and you know, very quickly. Now, so if SPY stays where it is the whole week, we will make this additional $287 and we can pocket the premium. Okay, so this is the call, and then I'm combining everything together, right? Because that's what we really want to see. If I start with SPY plus the call plus the cash, can I do better? So right now, and you can. So these are the profits for the stock plus call plus cash. Right now we are just tiny bit better. You know, it's not really significant. I think the significant will be, you know, down the road in a few months, because this strategy is definitely not quick winners. It's a slow strategy. It's a kind of low maintenance strategy as well. You don't have to do much. Okay, and I mostly will ignore the value of the account because, you know, anybody can do whatever they want with the cash, that extra in the account. I put it in the dividend stocks. One of them is doing well, one of them is not. But anyway, so this is here just for completeness, but I'm not gonna be talking about it much. Okay, so I charted the last 2 weeks. Essentially, we started with zero, everything, right? No cash, everything was. So if you look at the blue thing, that's the SPY. So you can see the profits went up and then a little bit down and then up again and then down, down, down. And this is as of today. So this is the situation as of today, or actually Friday, right? So, and as SPY was going up, the profits, so the yellow one is just the call itself, actually call plus cash from the call. And so you can see as SPY was going up quickly, we were actually losing some money on the call, right? If this is negative, right? And again, here SPY is up, so the profit is down. We actually want, for this strategy, we need SPY to be going up. That's good, but not quickly, right? Steadily, gradually, slowly up. It's perfect. So that's what we really got over the course of 2 weeks. We started at this level, right? Actually, well, that was at the end of 31st, and we are slightly higher 2 weeks later, right? And that's exactly what we want. And then the calls have some profit here, and the overall, this is the value of the account, or the profit of the account. I mean, the SPY plus the short put plus the cash from the short call plus the cash from the short call. Okay, so that's the performance. I'll see. Probably next week I'll still keep it day by day, but from for the next one I'll just keep it week by week. We'll see how it goes. Okay, so plans for next week. Actually, next week is really important because we have to roll the covered call to next month. So next week, the call will expire on Friday. So we can really decide when to roll. It's possible that depending on what SPY will do, I will either roll the call to the next month if it's close, if the expiration, if the strike price and the value of SPY are close. But if SPY is way below the strike price, I will just let the call expire and think about starting a new position early next week. So, as I said, we either roll the covered call to the next month, or we will let it expire and start new position Monday, Tuesday afterwards. That's pretty much it. Hopefully SPY will continue behaving nicely, meaning no large moves up or down, because those are the worst for covered call strategies. So far, steady, gradual rise is actually perfect for us. Anyway, I'll talk to you in a week.